Follow the Money Investor Group is a 100% Indigenous-owned company and certified with the Canadian Council for Aboriginal Business.
Good afternoon, and thank everyone for joining us. Today we have Dan Wilton, President, CEO, and Director of First Mining Gold Corp. Dan is here. He's going to tell us a little bit about his background. He's going to overview the projects for us and give us a better understanding of what the company has going on. Dan, if you want to start with letting us know a little bit about yourself.
Sure. Hi, Ashley, and thanks for having us here, and thanks for everyone for joining us today. A little bit about myself. Well, I am the CEO and Director of First Mining Gold. I've been the CEO here for about 6 years. Prior to that, my professional background has been associated with the mining business over a 30-plus year time frame. Both as a private equity fund manager for 5 years with a group called Pacific Road Capital. And prior to that, about a 20-year career in investment banking in a number of different stops, but almost always working with mining companies. So have a long background in the industry in which we find ourselves here today.
That's great. I was curious how long you've been with First Mining as it plays out in the timeline of the projects as well. So hearing the 6-year mark is you've been with the company for quite a while.
Yeah, we started in 2019, and if you'd have asked me then if I ever thought it would take this long or be this difficult or cost this much to get to where we are today, I'd have told you you're crazy, but yet here we are. No, it's been a wild ride. In that time, we've seen the gold price now more than double. As we're looking today, gold price in excess of $2,900 an ounce. And we've seen our share price more or less fall in half, which is insane to me because, we continue to move toward achievement of our milestones. We've done a lot of really, really good fundamental work on these projects and are in the later stages of the environmental assessment process, which I think is just going to be a major, major catalyst for the company and particularly the Springpole project that we have. But in that time, we've also significantly increased our resources. When we acquired the balance of Duparquet, we increased our resources by about 40%, gold resources, call it.
Wow.
Gold fundamental value, if you will, of the ounces that the company has. So it's been a pretty amazing time over those 6 years. And again, we sit here today at a point where I think we can see a lot of very, very significant catalysts in the next 12 months and, a share price, I think that's very much ready to turn the corner.
Which is exciting for the company. And I will say with the stock price, that's sector wide. That's not a First Mining thing. That's everyone is saying the same thing. The spot price of gold is through the roof, but no money is coming into the sector. Now, do you have any sort of inclination why that is, or do you think that it's just taking time?
I think it's the result of pretty long-term changes in the nature of the investor universe for gold companies, particularly junior gold companies like us. Mm-hmm. I think you've had a real flight of capital from the sector, and that flight started in 2011 and has more or less continued almost every year since then. So, you're 14 years into a down cycle. I think you've seen, a move that you've seen in a lot of different markets, but a move from active management to passive management. So right. From, people investing in mutual funds to people owning ETFs. And if you're not in some ETF product or some index, it can be very difficult to get that focus. So, we've been blessed at First Mining that we have a huge and very supportive shareholder base who's been there with us. Many of our shareholders have been there longer than I have, and we hear about it a lot, as we should as management. That it's been a long time that we've been moving these projects forward. But I think it is an inevitability that there is more money to come into the sector, and I think that inevitability goes back to really what is the what are the sources of capital that you're going to see starting to support the industry? And the most important one is the industry itself right now. I mean, and by the industry, I mean gold producers who are right now generating really record levels of free cash flow. Yes, there's been some cost escalation, but gold price has more than the increase in gold price has more than made up for that. So you have gold producers that are, very much accumulating cash on their balance sheets and at the same time depleting their resources.
Yeah.
And that's something that's really important to understand is that, at various times in a cycle, gold producers get rewarded for growth. Producers haven't been rewarded for growth really since the last cycle. They've been in cost containment mode. They've been, those that have just been able to hold on. There's been, a number of pretty interesting strategic acquisitions that have happened in the last couple of years that you're starting to see those companies getting rewarded for growth. And I think, you look at Alamos buying Argonaut, you look at Calibre buying Marathon, like both interesting, adding critical assets in Canada. I think, B2 acquiring Sabina, I put in that same list. So they're starting to get rewarded, but at the same time, most companies haven't had the ability to grow their resources significantly.
Right.
So we're coming to a point where those of us who are holding gold, like significant amounts of gold resources, we're going to get rewarded for it because the industry needs these projects. And going back to how long I've been at First Mining, I mean, when I started in 2019, the real strategy was to get our projects sort of advanced and ready for the time when the industry is going to need them the most. And I think that time is here. I really do.
Right. And now with First Mining having two of the largest projects, undeveloped projects, how poised are you to be excited? Like the majors are going to be looking at you. Is there a lot of other developers, or is First Mining a standalone company?
Well, I not standalone, but I think stand out when you look at how advanced our projects are. The reality is in that list of, call it 5 million ounce plus projects in Canada, and if you put those in order of where some of those projects are on an environmental assessment process, we're certainly near the front of that list. Submitted our initial environmental assessment in 2018, right? So we have been working on this for 7 years now, and we're hoping certainly on the federal process that we won't make it to 8. It will be through the process sort of within the next year. But that's where I think investors really need to dig into these things and ask the questions like, really, where are some of these other large projects in terms of that permitting process? Where are they in terms of project scoping, in terms of environmental assessment data collection? Because even before you submit into those processes, you often need 2 or 3 years of data to be able to formulate an environmental assessment submission. And that's something that we benefited from way back with Springpole, was that, particularly because everyone knew the deposit was in the bay of a lake, it just caused our predecessor companies to do an enormous amount of data collection to understand, like, is it going to be possible to develop a project there? So yeah, I think, we're sitting in a point with Springpole where that environmental assessment decision we're targeting at the end of the year, it's going to be a major catalyst for the company. And then with Duparquet, we've had to dial back the work programs a little bit in terms of real kind of development path. But the important thing at Duparquet is the exploration success that we're having is really having us ask the question, is this, the 3.5 million ounces of M&I and 2.5 million ounces of inferred resource that we have there today, or is it going to be something that's much bigger? And all of the exploration success that we're seeing there now is telling us that it's going to be much bigger. We're discovering new zones of mineralization, new controlling structures in this area that have never really been looked at before. So it's pretty rare in a project like that, past producing mines in the middle of, one of the most well-established gold mining belts on the planet, that you can be delineating new zones of mineralization that people haven't looked for, haven't even thought to test over the last, almost 100 years. I mean, they built the first gold mine in Duparquet in 1933. So it's rounding the corner on, almost 100 years that they've been actively mining in the area. But yet there's still so much that we can find. So we're pretty excited about that aspect of Duparquet and the exploration growth as well.
That is exciting. And now when you mentioned Springpole and you mentioned the environmental assessment, hoping for the results of that or a response at the end of the year, just for our investors that maybe don't have a lot of experience in mining companies, when I hear that the process has taken 7 years, I don't really flinch at it, because that seems like it's mining and it takes years and it takes a long time and it takes a lot of back and forth. And, you get the results and then you have to make adjustments and you have to give answers. Is that process a normal timeline?
Yeah, I mean, sadly, I think if you look around the world over the last 15 years, 20 years, 30 years that I've been doing this, you've seen those permitting timeframes stretch out and stretch out and stretch out, to the point where now I think from discovery to production on an average mine in Canada, the average time is 17 or 18 years.
Yeah.
In Ontario, Minister Peary talks about how, from discovery to production at the Kidd Creek mine, which is, one of the great mines in Canada, sort of at the tail end of its life now. But it was like 3 years from discovery to production. Well, it's not going to happen that quickly now, because there's more work that needs to be done. We know more about what we need to know in order to develop these projects in an environmentally responsible fashion. But at the same time, I think you hear it from pretty much every government, provincially and federally, in Canada and around the world, that we need to condense the time frame for this environmental assessment, because it's onerous. It's really, that time is money, and it's really onerous on a project developer like us. If you're a mining company that, has a couple of other mines that are producing, you have the revenue and cash flow to be able to support a growth pattern. It's not as onerous. But on a development company like ours, or an exploration company where you make a big discovery, and the reality is most discoveries are made by exploration companies, not that many discoveries really made by mining companies these days. It just, the longer that permitting time frame is and assessment time frame, the more onerous it is on companies like ours. And so it tends to compound on itself, because you have limited amounts of capital, so you can't move the programs forward as quickly as you would like. So, but no, I mean, for us, if we had had a little different access to capital, maybe we could have moved forward, a year, maybe at best a year and a half more quickly. But there's a certain amount of work that really does just need to get done.
Right.
And a big part of that for us is, in the work that we've been doing with Indigenous communities around the project, a lot of discussion about how those communities wanted to understand the project on their own terms. And it's some of the important work that we've been funding with a couple of the communities that we're working with.
That's really exciting. Now, have there been any major showing interest, or are you, as the CEO, just kind of lining up the company, just getting all the ducks in the rows, and whatever comes of it is what's going to come of it?
No, listen, we maintain a pretty regular dialogue with a bunch of the mining companies that would have an interest in projects of the size and scale of the projects that we have. So, these are major projects.
Mm-hmm.
They have the potential to be, globally significant producing mines, 200,000 or 300,000 ounces a year or more. And so, yeah, we maintain a regular dialogue with a pretty broad suite of mining companies, either as potential partners or potential, even strategic investors into First Mining. So, what I would say is, and up until now, most of those companies have had a pretty good reason to wait. I don't think any of those companies have much appetite to take permitting risk or licensing risk with a project, social licensing risk for that matter. So they've been quite happy to sit back and look while there was this perceived relative abundance of projects in Canada. And you don't have to go back too far, Ashley, to find a point where, call it in 2019 or 2020. Well, go back to when I started in 2019. There's a lot of reasons people said I was crazy to join First Mining. But amongst them, and a number of investors say, well, listen, and that Springpole project looks interesting, but the world just doesn't need another 1 gram gold project in Ontario. Because, in 2019, Detour was a disaster.
Right.
You had the Côté project that was never going to get moved forward. You had Hard Rock that was never going to get moved forward. You had Magino that was never going to get moved forward. Rainy River was a disaster. So like these big 1 gram gold projects, like no one wants those anymore. That was like a peak market, event. And now these things are, no one's going to commit the capital of these big projects. Well, you fast forward, actually, even at the end of 2019, I can recall it specifically. We were at another conference when Detour got bought by Kirkland Lake. And all of a sudden, the question was like, so is Springpole like Detour? Because Detour is a great project, these big, once they're built, these big projects, look, it can produce 500,000 ounces a year. And the same thing is happening now with Côté, right? Côté was going to be a disaster. It almost sank IAMGOLD. Well, sure, but now it's built.
Right.
And when it's built, what it cost to get it built and what happened in the process to get it built all kind of gets forgotten. You judge the asset at that point, and now this is going to be, knock on wood, it's still in commissioning, but a big, very successful, large gold producing project. So in 2020, there was a large number of projects that were available that could produce 200,000 or 300,000 ounces a year. I named most of them, but at Back River, at Blackwater, at Valentine, and lo and behold, almost all of those projects are now built. When people in 2019 said they'd never attract the capital to get built, well, they're now all built, and they're starting to pour a lot of gold, and most of them have actually already been bought. Right. And you had that certainly with Greenstone. You've seen it with Osisko and Goldfields buying out the remainder. You've seen it obviously with Sabina getting bought. Côté hasn't been bought, but it's, IAMGOLD is now pretty rapidly becoming a very Côté focused company. All these projects have been acquired. So you look now at what's available where you could potentially get shovels in the ground on a big gold project in Canada before 2030. And that's a very, very short list.
Wow. And you're within the next year or so expecting environmental assessment results. The catalyst is right there knocking on First Mining's door. What is the potential lifespan of the mine for First Mining?
So as we have Springpole scoped in our pre-feasibility study, it was about 11 years.
Okay.
It was really 9 years of construction, or 9 years of mining, and then the last couple of years processing some lower grade stockpiles. We know that there's some flexibility in the deposit, that if you build it a little bit smaller with a longer mine life, you have some ability to trade off some of the upfront capital as well. But the other thing is, we know, like all of these great districts, we've got 70,000 hectares of exploration tenure around Springpole. So no defined resources that we can point to today, but lots of very, very interesting exploration results that say, like most of these camps, they start with 10 or 15 year mine life, and they're producing 30 or 40 years later. And we think that there's a very, very good shot with Springpole and with the rest of the exploration properties we have in the Bertucci Greenstone Belt, really a dominant position in what is a fundamentally unexplored greenstone belt in Canada. It gives, I think, something that could give a larger company who can dedicate a bit more resources to unlocking that exploration potential while you're building or operating a mine. It's the kind of thing that larger companies look for, is to have that real district scale exploration potential. But for us, it's not at all hypothetical. We've already have some very, very interesting results in 2 or 3 different areas with a well demonstrated gold endowment. And it would be our goal that you're going to find another Great Bear or 2 in this Bertucci Greenstone Belt exploration package that we have. And so that could extend that mine life for a generation. Now, we'll deal with that, in its appropriate time. Right now, we're very focused on what we have defined at the Springpole Gold Project, but I think there's lots of room to see this really as a district that's going to bring economic development and jobs and employment and contracting opportunities for a generation in northwestern Ontario.
And how undervalued is the company right now, do you feel?
Very, incredibly so. Yeah, I mean, I know I'm the first mining company CEO to ever say his company is undervalued. No, I think if you look at what's happening with the gold price and the fact that, we're through $2,900 US this morning, we're already at all-time high Canadian gold prices.
Yeah.
Right? People need to remember that when you're looking at a project in Canada, there's still a significant portion of that capital and operating cost of that project that would be denominated in Canadian dollars. Mm-hmm. So a weak Canadian dollar is actually a huge economic benefit to a gold project in Canada. The economics we have on Springpole, it sounds ridiculous to talk about it now when we ran, not that long ago, but it was 4 years ago. We ran our pre-feasibility study at a $1,600 gold price and $20 silver. So, sitting today, and it was $1 billion of after-tax NPV, and every $100 in the gold price was another 150 million US of after-tax NPV.
Wow.
So that was, $1,300 ago in terms of gold price from where we are right now. So we're talking now, it's something that's going to be in the, call it $3 to $5 billion of fundamental value. Now costs have inflated as well. So you can't really just draw the curve straight up, but significant value in assets like this right now. And ultimately that'll come through for us as we get through the environmental assessment process. We'll update and finish our feasibility study work. So I think you're looking, inside a 12 to 18 month time frame at a really well-defined and very, very robust project.
And now, are you hoping for a buyout?
I think there's a lot of different ways that this can go. And, with the course of my career, both as an investor and as a corporate finance professional and investment banker, I think one of my concerns would be, I wouldn't want to see a buyout at anything like a current share price. Right. I don't think any of our shareholders have any real appetite for that. But ultimately, I think the path that we go down, particularly with Springpole, which is going to be a large capital project, I think it's a good project for us to look to bring a partner in on. Right. And so that's something that at the right time, there's always a bit of a question as to what is the right time to do that. But, I think if we're not there, we're getting there pretty soon, that it would make a lot of sense for us to talk to a number of larger mining companies about potentially coming in to work with us on the project. And that can look like a lot of different ways. But, I think we've seen in the industry a couple of pretty interesting joint venture deals that have ended up delivering really significant value to the shareholders of the underlying project. So, you look at what Gold Fields has done with Osisko, where they joint ventured into the Windfall project and then came back to buy the other 50%,
Right.
a little more than a year later. It was a very, very good outcome for the Osisko shareholders. But the other one that we point to is an Australian company called Gold Road that a few years ago partnered with a mining company, where the mining company basically spent all the money to build the mine, which is a big open pit mine in Western Australia, and they ended up owning 50% of it. And that, today, Gold Road is generating hundreds of millions of dollars of free cash flow from their 50%. And, it's sitting with a $2 billion market cap, $2 billion plus market cap. So, I think there's a lot of different ways that this value can be surfaced. I think we're all pretty pragmatic. Our entire management team are significant owners of the company, which I think is critical. You need that alignment with the shareholders, and we are all absolutely aligned with the shareholders. And getting more so all the time. So, at the right time, at the right price, sure. But you got to remember, we also have two very different projects inside this company, like major potential projects. And I think most of the investing world has no idea what the value we have is at Duparquet.
Right.
And that's something that, again, we often tell people, even if you don't ever believe we're going to get an environmental assessment approval at Springpole, and we will, we believe that we will. The value of Duparquet is, 5 to 10 times our current market cap anyway. One of the largest undeveloped gold projects in the middle of the Abitibi gold belt. There's a lot to like about it.
Okay, so great jurisdiction, tier 1 mining jurisdiction.
Yep.
2 of Canada's largest undeveloped gold projects.
Yep.
Management is experienced and they have skin in the game.
Yep.
What am I missing? What other reasons?
And an underlying commodity price that has the gold price setting new all-time highs and on its way, I think, much, much higher.
It's a bit of a catch-22 for the stock price because the current shareholders are frustrated, but any potential new shareholders are like, they're getting a deal. Or essentially, they could feel like they're getting a deal. So it's hard to manage that, I imagine.
Well, I made my first big investment into First Mining, buying shares in the market at just after I started as CEO. Well, first, don't think I'd quite started yet, but after I'd been announced as starting, in the 22-ish cents, and then a couple of big investments at 27 cents. Another big investment at 22 cents. So, I've now got more than $2 million of my own money spent buying stock either in the market or in financings for the company. Right. So I think you got to look around and actually ask a lot of the other CEOs who are in similar situations to me, how much they actually have put into it, and what I put in is a small fraction of what Keith Neumeyer's put into it, our board chair, and Keith's buying stock, maybe not every month, but certainly several times a year, increasing his position all the time. So, I think it's an unbelievable opportunity to get in at a very, very attractive cost base right now. And, I'll continue to look to average my cost base down as well.
Yeah. And when the fundamentals are solid, the stock price doesn't really matter.
Unfortunately, that's the case, right? There's at some point we've seen it on a couple of call it later stage development mining stories like ours, where over the last year or 18 months, you've just seen this turn in sentiment where all of a sudden people believe you're going to get to the finish line, right? And it can happen. It can be an external factor that can change people's perception. Nothing is really changing at the project. We're doing the same thing that we've been doing for the last 6 years. But all of a sudden that perception shifts. And, if you look at Perpetua Resources, which is a company that's been advancing a project in Idaho much longer than we've been doing Springpole. I mean, I think they've been at it since 2007 or 2008. There just came a point last year where all of a sudden people believed it and the stock is up 6x, right?
Wow.
I think if you look back in the history of Skeena Resources, which would be one of the other projects similar to Springpole in an advanced stage of environmental assessment, they're a bit further advanced on a feasibility study and the technical work around building the mine. It's a brownfield site, and they've had a lot more access to capital than we have. But even through their history, it's kind of, there was a period where it was just another development project, and then all of a sudden people believed it and the market cap went up 3, 4, 5x. And I think that's kind of what we're poised for here. I mean, if you look at the peers historically, with approaching a permit, you've been valued at kind of a 0.3 to 0.5 times that net asset value. Now, pick your gold price. I'll tell you what the net asset value is. But
Right.
even if you're looking at, $2,000 or $2,200 or $2,500, so well down from where we are on a spot basis, you've still got multiples of where we are now, even just for us to be reverting to the mean and trading at a 0.3 to 0.5 times that net asset value. So, what are the catalysts that get us there? I think we need to keep moving forward. I think we need to keep delivering on, hitting those milestones that we've said we're going to hit from an environmental assessment perspective, on a project de-risking perspective. And I think if there were something like a strategic investment coming from another industry player into the company, I think it'd be a cause for a reasonably immediate and significant re-rating. Just, again, that external stamp of credibility and validity in the project. So we're disappointed that it's going to take someone else telling people that the project's good for it to see the value in the share price. But I think we can only control what we can control, keep our head down, and keep moving the project towards these real fundamental value decisions. Because in the end, I think that fundamental value always gets surfaced one way or another.
Yeah, it's impossible to ignore. Now, we do have a couple of questions waiting. Did you want to take those now, and then we'll kind of do a wrap up and direct everyone to Paul for questions?
Yeah, sounds great.
Okay, so Adrian is asking, with the undervaluation of First Mining being very apparent, why doesn't Keith Neumeyer's First Majestic make a takeover bid in an effort to start a bidding war? If third parties do not step up to make a play for First Mining at that stage, perhaps it's not really as undervalued as we all believe.
Well, Adrian, appreciate that perspective. That's a question better asked of Keith than of me. First Majestic is first and foremost a silver company. And I think Keith will be the first person to tell you that. It was started as a silver company. Its shareholders want it to be a silver company. And they've just, bought another really interesting asset with Gatos. So I think they're feeling pretty good about where they are. But the challenge with being a silver company, and Keith will be the first person to tell you that, the real challenge is it's difficult to grow as a silver company. There really are not that many silver projects around. And so you've seen most silver companies go through these periods where they, most of the large cap ones, so say Hecla, Coeur, obviously First Majestic, where at times they need to add maybe gold projects with a silver component in order to continue to grow, because the universe of silver opportunities for growth is pretty limited. So I wouldn't again, I think let us get through the environmental assessment process before we'd consider something like that, because I think once we have the environmental assessment approval in hand, I think it is a very different landscape of potentially interested partners that we could work with. But again, as I said before, I think there's a lot of different ways other than just, an auction to sell the company that could deliver longer term, much higher value to the shareholders.
Yeah, and I think that's like, as a shareholder yourself, that's your key interest, right? Like you're trying to not please everybody, but you're going to do the most you can to get the best results out of the company. So some shareholders might be like, oh, let's just go for a buyout. Let's go for this. Let's get it done quickly. But that might not be in the best interest of the company as a whole and of all the shareholders.
Yeah, and listen, I think that's right. Again, I think when you're dealing with assets that have kind of the amount of fundamental value that we believe that we have with these assets, we owe it to all the shareholders to make sure we've explored all the opportunities to surface that value that we can.
Right. Now, if there was funding required for first mining, what different sources would you be looking at for that? Because I feel like it's not easy to raise money right now. I feel like we've heard this from a lot of CEOs. It's next to impossible to raise money. So what other avenues would you have as options?
Well, we're pretty blessed that we do have a bunch of different avenues. What we don't get a lot of credit for, but we do remind people pretty frequently, is that we started when I started at First Mining, we had something like 28 different mineral properties, and we've streamlined that over the course of the last 6 years, focusing on the two, Springpole and Duparquet, that for us we knew were the ones that were really going to be globally significant. But then bringing in partners on others to have them spend the money and help unlock the value. And so it's worked very well on projects like Pickle Crow, where Ateco, now FireFly Metals, came in and spent probably $40 million drilling that. They've drilled that out now to an almost 3 million ounce resource. It's one of the largest high-grade underground resources in Canada, in an area of fantastic jurisdiction in northwestern Ontario. Amazing infrastructure around the property, 3 shafts, 30 kilometers of underground workings. So a lot to like about that. But as they did that, we were able to take some of their shares in compensation. We sold those shares. We created a royalty on the property. We sold that royalty as part of a package. We did similar thing with Big Ridge Gold with our Hope Brook project in Newfoundland. Brought in a partner. They've spent the better part of $20 million on it. And now, we've been able to work those pieces into more and more funding for us. So in total, over the last 6 years, we've generated more than $60 million of cash from this,
which is huge,
portfolio of projects, which is a significant percentage of the money that we've spent on the projects.
Yeah, and that's very strategic.
Yeah, very much so. Very much so. So, we still got a lot of those opportunities there. We still own the 30% of Pickle Crow. We still own 20% at Hope Brook. We have our Cameron project, which we never really talk about, but we own that 100%, about 80 kilometers north of Rainy River. And then, just some other share positions and odds and sods that over time, I think we can continue to monetize to keep the runway stretching out. And then on top of that, we still we have almost no royalties at Duparquet. On the main Duparquet ore body, there are no royalties. So that opens up some flexibility there if we were potentially to look at call it a development stage royalty. And Springpole, there's still some room with royalties as well. And on top of all of that, we do have a shareholder base that has been there for us. And while it has been difficult to raise money, we still have been able to raise, $10 to $15 million when we've needed to stretch out that runway and do some of the very important work that we've needed to do. So lots of different sources of funding for us. We're obviously very conscious of any issues of dilution, particularly where the share price is right now. But yeah, I think we have a lot of different levers that we can pull for that.
That's excellent. So the last question that I have from Adrian, he's asking in regards to the environmental assessment, is there a way to reduce the cost by using artificial intelligence, or is that something that's newly being talked about, or an option on any front for First Mining?
I wish we were 8 years more advanced with AI when we started the process. I mean, I'll tell you my own view. I think fundamentally AI is going to dramatically change, things like environmental assessment work and
Mhm.
feasibility studies, engineering technical studies. Um, I think that industry is going to see a lot of shakeup from AI. From our standpoint, though, a lot of the work that we need to do is actually just the original physical data collection. We need to be the people on the boats and at the
Right.
streams and on the ground and building the Wolverine hair traps and collecting lake trout DNA samples and the amount of things that I never thought I would
Hard.
ever learn about as the CEO of a mining development company. But no, it's a lot of that real fundamental, environmental, scientific, and geological, geochemical data collection. That is essentially the value of what you have, right? As a
Right.
mining company, you have mineral tenure, and you have your data collection, and
Mhm.
that's and your social license. Ultimately, those are like the most important things that you can then scope and shape and hopefully turn into a producing mine one day. So yeah, I think the AI going forward, I think AI is going to revolutionize the mining industry in a lot of ways we
Mhm.
haven't even really thought of. We're already starting to see it a little bit on exploration.
Yeah.
Well, there is, an element of exploration that I think is still more art than science. But we're seeing it there, and going forward, I am hopeful that things like AI will dramatically speed up and reduce the cost of producing environmental assessment documents, of producing feasibility studies, because I think there's a lot that those can benefit from. Um, the horsepower of an AI engine, getting not all the way to the finish line, but certainly helping to
Helping it
iterate
along.
and come up with
Yeah.
better opportunities. So no, I think there's a lot going forward that the industry is going to benefit from, but unfortunately or fortunately, we've already kind of done all the hard work parts that it would really want to help us with. So for our
Maybe for
next project,
Duparquet.
maybe for our next project.
Yeah. Okay, Dan. Well, thank you so much for joining us. If anybody has other questions that they would like to have answered, please reach out to Paul at First Mining. That's Paul at firstmining.com. He is more than happy to take on your questions. I am sure he's always by the phone. He responds to my calls within just a minute. So he is happy to assist and help clarify anything. Newer investors, newer shareholders, please feel free to reach out to get the full picture, to get up to date on everything, and sign up for email updates as well, because there is news coming. There's recent news out on the website that you can find at firstmining.com. And Dan, thank you. I know you're a busy guy. It is the heart of mining season. Where can we see you next? Where will your next interview be? What conference are you going to next?
Well, I think we're from here to the BMO conference in Florida, which is one of the biggest gatherings of mining companies around the world, and then at PDAC after that. So, and we've just last week we're at a very interesting conference in Thunder Bay, focused around Indigenous business and Indigenous business opportunities, which was fascinating, and got to connect with a lot of good. Long friends and make new friends at that conference, and we're at another. Yeah, we're right in the heart of it, as you say, Ashley. So it won't be too long. You'll be seeing us again, I'm sure.
It's exciting, and we hope to have you on soon to catch up again, because I'm sure with all the company has going on, you're going to have lots of updates to share. So
We'll look
thanks so
forward
much,
to it.
Dan, and we'll
That's
talk
great.
soon.
Thanks again.
Follow the Money Investor Group is a 100% Indigenous-owned company and certified with the Canadian Council for Aboriginal Business.